Good afternoon. Today is Tuesday, September 26th. The time right now in Singapore is 10 minutes past noon. And overnight, we have very little action, although US equity continue to slide first before it rebounds and close on a positive note. What we're seeing here in the Dow Jones Industrial Average, the cash index in the 4 hours time frame, seen the Dow Jones actually tested a low of 33,780 before rebounding and closed at 34,000 and above. So we can see that the market right now has traced out a three-wave pullback. Ideal target was actually at the 33,420 levels. However, this bracket of prices between 33,400 to 33,677 is actually an area of previous demand that saw the prices actually went for the year high at 35,679.1 back in August. So we can see that right now this the fact that it can actually bounce off 33,780 very near an area of no demand suggests that there is the possibility that in the absence of any major economic news until Friday, in which we will be seeing the release of the personal consumption expenditure numbers, market is going to drift. And of course, right now the market is still basically in the shadow of what the Fed chairman said last Wednesday about keeping interest rate higher for longer. So this is actually underpinning the market itself. So the other concern is, of course, if by the end of this weekend, September the 30th, if there's no agreement to pass through certain spending bill in Congress, the U.S. government is likely to shut down, and this is hanging over the market, and that is the reason why we can see prices has been sliding since. And will this be a situation will cause the U.S. government to shut down for longer than expected? If it does, then the damage to the U.S. economy will be untold. Although previous historical data has actually suggests that the government shutdown is unlikely to be long. The last time it actually went past 30 days was back in 2018 during the Trump administration, in which the US government shut down for 35 days, the longest in its history. But most government shutdown last between 1 to 8 days on average. So we can see that for the time being, the risk of a prolonged government shutdown is not in the card, and therefore there is a possibility of a rebound. Okay, so do watch out for that in the near term. So in the S&P 500 cash index, you are seeing similar pattern being played out. The high traded at 4,607 has now come to a point whereby there's a three-way, very clear-cut pullback to 4,302.7 overnight before it closed at 4,337, as we are talking about right now. This is actually just above the area of demand at 4,261 to 4,300. So you can see this bracket of prices is actually where the demand came in, which saw the S&P 500 got push up all the way to the year high at 4,607. So this could be an area to watch out in the near term. There is a possibility of a rebound. In the Nasdaq 100, we don't have a very neat three-way pullback, although it is still a three-way pullback. But this pullback here has not taken out the low here at 14,557. So if we do see further slide going on, there is a possibility the market may actually try the 14,245 level, which is this level here, or this level over here, which is near the bottom of this highlighted bracket at 14,283. So we want to watch how price behave now that it is already marginally in the bracket here. So again, the risk is for a technical rebound going forward. Over in Asia, in the Hang Seng, we can see that this morning Hang Seng continued to slide. So the overall rally that we saw all the way to 18,178 has almost been fully unwind. And now the risk is that the market will take out the year low at 17,514. So this is actually, technically speaking, not a very pretty picture going forward. If the market continues to slide, there's a risk that the market may actually gun for 16,900 to as low as 16,767. Okay. And over the Nikkei, we are seeing similar move. The rally that from 31,940 to 32,530 in the futures contract has seen a pullback. Currently now is at 32,200 levels, and the nearby support is likely to be somewhere in the area of 31,830 to 31,890. And this is a very minor support. The bigger one will be just beneath it at 31,540 to 31,680. So by and large, we do see prices has not been able to sustain at meaningfully at a higher level. We can see there's a double top here, and the market has been pulling back since in a very steep drop. So this could actually set the stage for further losses in the Nikkei as well. And in the dollar, we can see that the dollar remains very firm. Last time we have a high at 105.79. This is a 6-month high. And if the market managed to close above 105.90, it will actually lay the stage for a move to 106.80 to 107.90. So we can see there's still quite a bit of a gap here. Prices still remains in the lower half of the rising channel. You can see this midpoint here, the dotted line. Prices has been hugging this line for quite some time, and unless it can close above this line, it is likely to stay below the line here and trade lower. So we want to watch how the dollar index behave going forward. There is a risk that a correction is not very far behind. When we look at a principal currency, we can see that they are correspondingly falling because the dollar has been very strong. And in the euro versus the dollar, we can see this morning we have a low at 105.75, and this is just a touch above a area of demand at 105.16 to 105.65. So we are not that far away. So hopefully we can see some kind of support coming in here that may see a technical rebound, and in turn we'll also see a dollar pullback in the dollar index. Hopefully that is the scenario. Over in the sterling, we can still, sterling is still falling as we are speaking this morning. As it is right now, market has already broken the 122 even, now is trading to a low of 121.93, and this is already in the bracket of a known support area at 121.68 to 122.04. Okay, so do watch out for some kind of support around here all the way until London opening. Hopefully the market will actually rebound. However, top side will be capped at 124.16 to 124.45. And over in the Aussie is still operating in a very wide band between 0.63 half to as high as 0.6535. So between these two range of prices, market is likely to hang in between. So right now, if the market drifts back into the lower end, actually it does make sense to actually to look for a level to buy on the dip, with the expectation that it will challenge this upper limit at around 0.65 sometime in the near future. Okay, dollar yen remains on a major bull run. This morning it just taken out a major level of resistance. It's trading at 148.96. This is the highest we ever seen dollar yen traded for the whole of this year, and this opens up the possibility that it may actually gun for 150 to 151. Now 150 is a very round number, a very convenient number. As the market trades higher towards 150, the risk of a major intervention looms overhead. So be very careful chasing this dollar pair any higher than where we are right now. So the risk is to the downside. Do be aware that the risk of intervention is very real. Okay, dollar versus Canadian, however, is already seeing a bit of a consolidation. We have an initial three-wave bounce to 135.24, and the market has pulled back. And market can go two ways. Either it continue to trade higher in a larger degree, three-wave targeting 135.70, or the market tops out and continue to trade lower into 133.55 to 133.75 area. Okay, do watch out for this move here. I do suspect that overall, if the market do bounce even to 135.70, it may still unfold in a larger degree three-wave targeting below 133.70. Okay, over in the crude oil, we can see crude oil has come off a little bit, but not by very much. The high traded is still at $92.43 in the futures contract versus via the WTI, which is the West Texas Intermediate Crude. And this is likely to see the market unfolding in a three-wave, ideally targeting somewhere between $86.30 to $87.30. Now, this is the equality move. I have expectations, or actually hope rather than expectation, that the market can go into the $86 range so that I can actually buy. I have been wanting to buy crude oil for quite some time after getting out prematurely and seeing the market rally above $90 without me. Okay, and in the gold market, we can see gold market is currently coming off, especially in the gold market. This morning we have a low at 1,912.70, and this looks like the market may actually go lower into this bracket of prices to challenge the 1,900, perhaps even lower, to test the $1,884.50. So by and large, we just see near-term weakness in the gold market. However, silver is on the relative basis a lot firmer than gold. There is still hope that the market may actually do a three-wave rally towards the $24.10 level. But as it is right now, the market right now is back into this bracket of prices between $22.84 to $22.96. Again, let's see whether this area of support can actually hold out for this alternate scenario of a rebound back to $24.10, whether it will pan out that way. But if the market continues to slide, then again, the natural course of event is likely to see silver prices dipping back into $22 range. Okay. And over in Bitcoin, we can see Bitcoin is not doing very much. You can see that the Bitcoin prices has actually slid down from the high of $26,770 all the way down to test the 26,000 handle, and it managed to hold. And this is the bracket of prices in which I identified earlier, whereby I think buyers may actually re-emerge, and it did. Okay, the low was 26,000. Just above that level at $26,003, and the market is again back into this bracket of prices where resistance is obviously residing here. So in the near term, there is hardly going to be anything interesting to happen. If the shutdown in the US government actually happens, that will mean any hope of the SEC approving any kind of spot BTC ETF application will be gone, because the SEC will actually be shut down, or at least 90% of its staff will be asked to stay home with no pay because they are federally funded. So if that's the case, that will mean that there is going to be very little activity happening during the period of shutdown. It is actually biased to the downside, in my opinion. So do watch out for further losses in Bitcoin, and possibly a retest of 25,000 is not that far a possibility. In the meantime, that's all I have for you. You take care, and I come back to you tomorrow with another update. Bye-bye.